Yeah. Hello, viewers. Welcome to the Investonomic webinar on the Union Budget 2023. We have our esteemed guest, Mr. Swarup Mohanty, CEO and Associate Director at Mirae Asset Investment Managers, with us to take us through his views on the Union Budget 2023. Good evening, Mr. Mohanty. The government just presented the Union, Nirmala Sitharaman just presented the Union Budget. I would like to have your first take on the budget. How would you rate it on a scale of 1 to 10 for the capital markets and 1 to 10 for economy?
Ashish, on behalf of Mirae, I'd like to thank you for having me on this very eventful sort of day, because when you look at all budgets and this budget in particular, it is just ahead of a great election coming next year. So it was an eventful budget. Otherwise, I think a budget is just one stop in the overall journey of a country. But when you look at it and what came on the table, we would definitely rate the budget for capital markets and economy both between 7 and 8. I think the reasons are very simple. It is growth oriented, and that is what was desired. It has been able to manage a fine line between what we call a fiscal consolidation, and it has also provided a growth support. I mean, a fiscal deficit of around 6.4 of GDP for financial year 2023 is in line with last year's budget estimate. So it's held on to that. And a fiscal deficit of around 5.9% of GDP for financial year 2024 will be leading to, say, a 0.5% of GDP fiscal consolidation. So it also reiterated the fact that its intention to reach a fiscal deficit of under 4.5 of GDP by financial year 2026, if I get that right. Of course, it is a capex focused, and that is what was needed, because the problem of the country is private capex is still not in place, and the best the government can do is start the capex themselves. And that is what it brought to the table, and that's something which we really appreciate, and especially the push to the infra of railways, roads, and telecom just assured the country that that is a path which is in progression. And to be fair, I think that's the need of the hour. And to put that kind of money on railways is a very welcome to think and to see. I think more important is it has credibility of numbers, and that you have to give to this regime, that they have really looked at the fiscal numbers and they look very sort of broadly credible. I think the slightly rich assumptions on the revenue side could be offset by saving on expenditure. Broadly, net, we feel it's been a very strong budget, and it's continued the process of growth for the country.
Thank you, Mr. Mohanty. What are your top 3 takeaways on the budget? And do you feel there were some disappointments, also some things they missed out to include in the budget?
I think no major disappointments as such. In fact, no freebies. I think that was, one of the best things that could have happened, because everybody was expecting, since this was a pre-election budget, since that did not come, we look at it very positively. I think some of the other side of the budget could be the take on insurance, taxing proceeds from insurance policies, non-ULIP, where aggregate premium of excessive of 5 lakh per annum will start from 1st April 2023. That's something which is a deviation. And the short-term capital gains tax introduced on MLDs. Please understand, the insurance, the non-banking finance companies had stopped getting money from most of the mutual funds. So this was a good way for them. And now that's going to be taxed. And the capital gains in excess of 10 crores cannot be used to avoid exemption, is also for the property gains, is also something which has to be viewed in the right perspective. But my personal thing was, I had expected a little, and this is what I had said yesterday, I had expected a little more allocation to healthcare. And I think that's where I would say my personal opinion on the miss of the budget was. If you look at the allocation to infra, to defense versus healthcare and post-COVID, my personal opinion it could have been a little higher.
Okay. So to take it from there only, there was much was expected from the budget on the infra side, and they have announced a big infra push. But are you satisfied with the measures taken, or something more would have been done on that?
I think under the present condition and within the present fiscal, I think it has provided a strong impetus on capital and capex spending. Up 32%
Mhm.
year on year to 15 lakh crore, including the PSU capex. I think it delivered largely on expected lines for key infrastructure sectors like roads, railways, and water. I thought there they didn't disappoint at all. It was definitely a job well done.
Okay. Okay. So you have said about railways and infra. So which sectors are poised to gain based on the budget? What do you think are the major beneficiaries? Which sectors will be the major beneficiaries of the budget?
I think naturally, with the higher allocation towards capex, it augurs well for infrastructure, cement, cap goods. Let's face some facts that cap goods have started a run last year after probably a 10-year lag, and this will probably propel it further. So it's good for that segment. The second order benefit to come from banks, of course, because of this, the banks will benefit and it will lead to higher credit growth. And as a house, we've been watching that space very, very closely because credit offtake has to happen for the country to get into the next leg. We feel there is impetus from this for that to happen. So banks will be the second level beneficiary for all this.
Okay. So, Madam Finance Minister spent some time on the new tax regime and she elaborated some changes. So, what do you say? How the proposed changes in the new income tax regime going to affect consumption and investment both?
See, I think both have to be looked at very differently from here on. It's a very clear signal from the finance ministry to move to the new tax regime, and people need to sort of get into that because what will happen now is due to this, there'll be higher disposable income. That's only for people who go to the new tax
Hmm.
regime. And that will definitely boost consumption. When you have spare money, you sort of tend to consume it more than if you don't have. And that's natural. The second part, which is a very important part to sort of gather from here on, and I suspect that will be the journey of budgets. It's a clear deviation from tax SOPs to now just tax payment and a more flatter sort of tax budgets from here on. So it'll be interesting to watch how Indians graduate from the old one to the new one, because Indians look at budgets for a tax SOP and more of tax SOPs on that, and this is deviating from that. And
Yeah.
the fine print put on that is very clear that the government now will push for the new tax regime. When that happens, it is advantage investments. It will be advantage people who are in the investment business. It will put higher responsibility on investors to look at money management more seriously than in the past. So what will happen is this continuation post demon and COVID towards financial assets will only continue to grow, and that's the right way forward, if you ask me.
Okay. Okay. Great. So to sum it up, what's your view on the markets? Because we all are players in the equity markets, and the advice to investors on where to allocate money going forward.
Yeah, I think broadly, if you see the reduction of tax exemption on life insurance should increase retail participation in equities. That's what
Okay.
is our view. And if you look at
Hmm.
no change in capital gain tax is also positive, that as there were expectations of unfavorable changes. I do not know why this expectation is always there, but that is what is talked about before every budget. And it, it was a non-starter if you ask me personally, but since there are no
Okay.
unfavorable changes, it still continues to be positive for investors towards the market. And that's something which we have seen in the last 2 3 years. The
Hmm.
occupancy of the market, if I can say, from individual, whether it's for mutual
Hmm.
funds or for demat accounts or for just buying retail equity per se, has been growing steadily
Hmm.
for the last 2 3 years, and this has got consolidated mostly post COVID, and this will continue. What is also interesting to note now is we do expect bond yields to fall due to the fiscal consolidation. And if you
Okay.
look at our earlier house view, it was a very clear view that in a rising interest rate market, equities cannot be re-rated. But here's the change
Hmm.
that was required. And when bond yields start consolidating or start moving south, we will see that this will reduce the discounting rate and thereby make a case for valuation or re-rating for equity. So from the next 6-8 month perspective, this is what can possibly happen. Yields might soften, and once that soften, it can then propel the equity markets in the next 5-10 months. So for the equity markets in general, it's all positive, and we'll have new investors coming in. The sense of investing will be more important, and there'll be a clear shift from fixed assets to financial assets. So that's how it looks. I think there is some space for the senior citizens also, which has been kept in country. But if you look at the demography, since the young are more than the old now, the young will take to investing much more than what the old is. So it's a good balance, and it plays out well for future. It is also important, more the shift towards financial assets, the better their future can be in a country which is going from 3 trillion to 6 trillion. And there is no stopping that in this entire globe, which is going the other way. The opportunity should not be missed. I always say that there is
great to have hear your views on the budget and your views on the markets and the way forward. So thank you for your time, giving us time and giving us opportunity to interact with you. Thanks, viewers, for joining us on the special Investonomics series on Budget 2023. Thanks.
Thank you so much for having me.